5 countries to buy property without tax. In various parts of the world, no property taxes are imposed on private property owners. In these nations, purchasing a piece of real estate, such as a house, would result in large savings in taxation. Because the amount of property tax that must be paid by individuals can be as much as tens of thousands of dollars in places such as California and New York, it will be greatly cost-effective to own properties in the cities mentioned below. However, please keep in mind that while the property tax might be $0, there can be some other charges that you might not have prepared for in those countries to buy property without tax. Here is our list of the top 5 countries to buy property without tax. Number 5. Georgia. In 1990, the Georgian people made the decision to reject their communist economic system. Since then, they have been confronted with other hurdles in reorganizing the country's economy into a market-based one. Georgia needed to develop a working tax system that can effectively maintain the government's operations in the face of increased institutional demands. Such a system has to be effective in terms of both economic development and the generation of long-term state income. Following a series of failures before 2004, Georgia decided to ditch its existing method of taxes and focus instead on simplification, lowering rates, and digitizing the system. Over the course of the previous 2 decades, the Republic of Georgia has effectively implemented significant tax changes. One of them was slashing the property taxes to almost zero. With varied and automated agriculture as well as a well-developed industrial foundation, Georgia now has a diverse and dynamic economy. The agricultural sector accounts for almost half of the gross domestic product and employs around 1/4 of the labor force, whilst the manufacturing and service sectors each employ approximately 1/5 of the labor force. As you know, farmlands are getting scarce, and acquiring some agricultural land without any property tax will be a great idea. Georgia is now well known for its low tax rates as well as the considerate economic policies that it provides to its citizens. Also considered as one of the most business-friendly countries in the world, it is a popular tourist destination. Despite the fact that there is no property tax to be paid by individual homeowners, there are a few exceptions. A 0.1% property tax would be levied on anyone earning a yearly income of more than 40,000 lari, about $15,000. This, however, is a very little amount, and it is only relevant to income obtained from sources in Georgia. Tax is not levied on incomes from non-Georgian sources in this country. Even if the individual has a Georgian source of income, the 0.1% tax rate is quite low when compared to rates in the majority of other nations across the world. Another significant advantage that should be considered is the fact that there are no stamp duty or transfer taxes applicable to the purchase of a real estate in the state of Georgia. Number 4. Croatia. Croatia is a tiny yet geographically diversified crescent-shaped country with a high degree of cultural diversity. Croatia's capital, Zagreb, is located in the country's northern region. Following the fall of communism in Croatia in 1990, the Croatian government embarked on a course of economic reform that would see the country transition from the Yugoslav system of socialist self-management to market-oriented capitalism. In order to achieve this, initiatives like the privatization of state-owned firms, the construction of functional markets, and the establishment of stable prices, interest rates, and currencies were implemented. These didn't happen without challenges brought about primarily by the destabilizing impact of the war on society. Foreign investment, which was a critical driver of economic development and structural change in other Central and Eastern European nations, was inhibited by the conflict. This also resulted in the devastation of infrastructure and manufacturing facilities. Property taxes have a far-reaching and pervasive influence on the economy of the country, where more than 3/4 of the population own their own house, making them a significant source of revenue. However, in 2017, following widespread public protest and a countrywide campaign, an effort to repeal property taxes, which were previously set at 5% across the board through lobbying, was successful, and the tax was repealed in 2018. Croatia, on the other hand, levies a tax on real estate transactions, such as the selling of a house. As recently as 2020, a proposal to have this 3% tariff repealed was placed before Parliament, and it received overwhelming support from the public. While it was anticipated that the property transaction tax would be removed as early as 2021, the discussion remains in its preliminary stages. Number 3. Liechtenstein. Between Switzerland and Austria, there is a small country known as the Principality of Liechtenstein. It is one of the smallest countries in Europe, Vaduz as its capital and largest city. Liechtenstein is a constitutional monarchy with a parliamentary system of government. The prince is the country's head of state, and he ascends the throne through the male line, according to the rules and traditions of the royal family. The German Constitution of 1921 establishes a unicameral Landtag, Diet, which is comprised of 25 members who are elected to 4-year terms in the Bundestag. Property taxes are not levied in Liechtenstein. However, notional income derived from the net worth of a property is subject to income tax in the country. In addition, there is no real estate tax for corporate entities. Sales of real estate interest in Liechtenstein companies, as well as sales of real estate in Liechtenstein itself, are subject to capital gains tax. Number 2. Monaco. Taking a brief initial look at the European nations, you may at first not expect to see anything significantly attractive about Monaco, one of the tiniest and most attractive countries in Europe. Actually, Monaco is another constitutional monarchy located in a tiny enclave on the French Riviera. It is well known for its beach villas, which are located on the beachfront and provide a very appealing residential property that attracts a large number of international investors and individuals to purchase a home in the country. Monaco does not levy any type of property tax on its residents. It has become significantly more appealing for individuals to own a residential property in this area as a result of the lack of property tax. If a person desires to rent out his property situated in Monaco, he may do so with relative ease, thanks to a 1% tax rate which is paid by the tenant. Consequently, Monaco is one of the finest countries in the world to own a home since there is no property tax. The stamp duty on property acquisition in Monaco typically ranges from 4.5% to 7.5%, depending on the conditions of the transaction. Number 1. Malta. In addition to being a well-known tourist destination in the globe, Malta is also well known for its climatic conditions, coastline, and ability to provide an outstanding environment for new starting companies or businesses, among other things. Malta is located between Sicily and North Africa. In our ranking of countries with no property taxes, it is the first country on the list. It is also one of the most sought-after areas for folks who are looking to settle down in a new location, especially expat entrepreneurs. In order to achieve greater economic and financial stability, Malta has taken a number of critical steps which are widely recognized. This is made possible by the Malta Global Residence Program, which is the most significant and appealing initiative implemented by the country's government to this end. With the assistance of this scheme, anybody can get permanent residency in Malta, as well as free travel within the EU Schengen region if they so want. Not only that, Malta does not impose any kind of property taxes. In place of the property tax, there is a stamp duty that is levied on all purchases. Malta residents who seek to have an EU resident status, as well as some tax-free property, will find Malta to be a very attractive alternative. Malta's stamp duty on property purchases is 5% of the transaction price. There are just a handful of nations in the world where there is no property tax at all. For example, several jurisdictions have simply enabled property owners to make a one-time payment in the form of a stamp tax or similar levy, thereby eliminating the need for perpetual taxation. You may retain more of your own money in your pocket each year in nations where there are no yearly property taxes, at the very least. The majority of governments don't want you to do that, so they explore every possible means of taxing you. Thank you for watching this video. Please don't forget to subscribe, comment, and turn on the notification bell. This is Learning Canteen.